Everyone's doing well. Welcome back to another midweek outlook, right? So cool. I know everyone's probably been sitting on their hands, itching, waiting for the next sort of setup. And, sometimes the chart's just not clear and it's very difficult to have conviction. You guys will see, right? From the start of the year on the channel, we had quite I would say, jam-packed run, right? We had about 8 trades in a row. And now, it was quite frequent every day, every other day, the little gaps in between. And now all of a sudden it's been quiet for, maybe close to a week off the top of my head, right? There's not been what I would say a setup I've seen with conviction. There have been a couple setups here and there. I've looked at the DXY. I've seen, this London session wasn't horrible. It delivered. A couple times I even marked out things that end up delivering, but if you guys will watch the trade breakdowns, it comes back to that idea of conviction, right? How clear is the bias? Of course, everybody can see a 15-minute OTE. Everyone can see a, 5-minute market structure shift, whatever it is, right? But the conviction behind it to execute on that, has it ticked all the other boxes for you to be taking this trade? All those things to consider. So, of course, one major thing we've been waiting on is a daily candle recently with very clear direction. Right, we haven't been getting that. If we actually quickly just come over to DXY, get into specifics. If you just look at the last few daily candles, it's just not been great. After this candle, we wanted to move down, took the previous day low, sent up. The next day, we didn't know what we wanted, which is the Monday to open this week. Just done its own thing. Tuesday takes the previous daily high, dumps off, and then today, well, you guys can see today's candle still not closed, right? But cool. Let's talk about today. We had the CPI drop, right, which is the inflation readings. So the CPI has actually come in higher than expected in all three categories, right? And essentially what that's showing is inflation is hot. So cool. Rule of thumb, everybody knows inflation is hot. Let's go on a lower time frame quickly. Inflation comes in hot, CPI drops, middle of New York, price absolutely pumps, bond yields send it upwards. Cool. 3 p.m. news comes, we have Powell come in, making some comments, several comments, and the market dumps, right? So essentially, the daily profile was accumulation, manipulation, and then distribution this way, right? Just for reference, not something you were looking to trade or did trade at all. All right, cool. Now, from here, right, I know there's still a few hours. Usually I like making these late, but I realize, a lot of people are sort of unable to watch them if I post them too late. We'll go off of where the daily candle is now. I'm hoping, right, looking at this chart, that the daily candle moves slightly lower, right? The lower it closes, the more conviction I have in us heading even lower. Because if this daily candle closes with basically nobody and we trade higher, then there's no clear bias for tomorrow. Despite what people may think, despite the sort of order of events here, accumulation, manipulated this way, then distribution, I just wouldn't be confident. It comes back to that thing of conviction. If this body can close even slightly lower, looking, very bearish, and then we consider all those things we said, that accumulation, the number of the previous daily high, and the push lower, then I can be a bit more confident and say, you know what, this is probably the high of the week. It's a Wednesday. It was CPI. It's the midweek reversal from here. I anticipate bearish delivery. So now, if it closes how we're hoping, and even when we look at our weekly, I would be hopeful we're heading this way. The next obvious target is going to be previous weekly low followed by the previous monthly low. If you come out to our monthly chart, based on what the candle looks like right now, I would argue that the higher the month is in, we're almost at mid-month, right? February is a slightly shorter month, so only a couple of days away. And if I had to pick a direction of expansion from here, it would be previous monthly. Just based on how it's looking, based on where and how this high was placed, I wouldn't have high hopes for price, pumping up from here by a crazy amount by any means, right? Now, one thing that sort of concerns me is that when we come onto the sort of 4-hour, we see these big wicks and we see this sort of larger consolidation. We see even a trend line here. Now, this doesn't mean necessarily that price cannot take this out, right? That is what we actually want to see it do. However, there's a off chance, price will come here, trade maybe a little lower, potentially take the previous day low, and then go back in the break, right? So in a environment like this, it is very important that we're conservative, right? Unless price is absolutely displaced and I'm making it super, super clear it's going to deliver, right? it's important to be conservative. For example, right, what's a good example of being conservative? Let's just say I was in a short exactly where price is right now, right? This candle is here. I know if I enter a short here on the lower time frame, right, my easiest target is the previous candle's low, right? Target 1. Target 2 may be this, right? One of these two, which is previous weekly low, and then of course previous monthly. In conditions which are great, there's good reason to set a trade and potentially hold it towards the large targets, right? Maybe your trade hits 2, 3, or you close half of it, go break even, hold it. In conditions like how price is now, where we're a little bit unsure, it's a lot of back and forth, whipsaw price action, you probably just want to close that trade once it gets here. And when you're in the trade, you want to be very strict with the risk management, quickly shaving the risk off, right? Because it's these type of conditions where it's very easy to blow an account. When you're having to switch bias back and forth because it's not clear, that is likely when you will end up taking too many positions or trading yourself, right? Sorry, blowing off your account, essentially, right? So it's important you don't get too sucked in. What we want to see from here, right, is continuation. It would be very, very great if we can see this as a sort of 1 hour OTE, AMD. We see this hold tomorrow, and then from here, this area, price trades lower, you can target this low, and then of course the further sell side from there, right? Now, one thing again that I'm not necessarily happy with at the moment is our bond yields. Now, this is definitely a scenario we considered. We did say it's not exactly what we want, but we had to bear in mind we are very close to the previous monthly low. If we run this and displace higher, this may not be a Persian river and we get another run up, right? Or we said potentially we could run for this buy side on the higher time frame, run all the way up here. Now, am I, looking to jump the gun and say, oh yeah, we're absolutely going to target this? No, absolutely not, right? There's no reason just yet for us to be saying this. It's one inflation reading. We have PPI coming in tomorrow as well. It might completely reverse things, right? But of course, we have run the previous monthly low. We have had a sweep. This is a weekly OT, and we have started trading high. Now we've taken the previous weekly high, some more internal buy side liquidity, right? Running sort of all these lower time frame highs that we spoke about. So but one point to note, which is very conflicting, is that we left equal lows down here as well. Very, very equal daily lows, right? 4.4 on the dot, or 4.4% over here to be precise on both, right? So I'm not entirely convinced that bond yield will run all the way up. What I'm looking for, right, is essentially what's the next sort of economic data that's going to come in, which is the PPI tomorrow, and where is that going to push price? What are the type of numbers that are going to come out? Now, if the US 10-year is essentially trending up and the DXY is trending down, what that means is we get something called high resistance liquidity run conditions, right? It's called HRLR, it's an ICT concept, right? Essentially means that they're not in sync. When they're in sync, you're going to have high resistance. High resistance meaning you're not going to get clean run, right? It's not going to run, sometimes price just absolutely smashes one way. For example, like this, when this is running up, perhaps DXY is running up, I think very likely it was running up, and it's just very smooth. But when the bond yields are moving one way, DXY is moving another, it's probably not going to be smooth. And then again, that feeds into that idea of, look, if we do get up and our boxes are ticked and it looks good, let's execute, but let's be conservative and let's manage the risk very hard, right? Because that's the type of conditions we're currently in. So cool. Now, not much to say, especially from a monthly perspective. As we'll see, the daily is probably the most important here anyways. But again, not much to say from the weekly. We are heading towards potentially the previous weekly high. But essentially, long story short, we're in a daily consolidation, right? We've had a couple daily candles where we're taking the previous daily high, trading lower, taking the previous daily low, trading higher. That's, it's just simple consolidation. So from here, what we want to see, right, most likely is a form of AMD, right? We have an accumulation, we want to be patient, we want to wait for a clear manipulation either way, and then from there we can start talking about distribution. We sit right in the middle of this range. I want to see price run lower here, right? Like I said, if I'm, gone to head, if I had to pick a bias, of course I'm picking lower, right? I think this is a lot of liquidity being engineered, and if you are going to get manipulation, I like to see accumulation, manipulation here, potentially previous weekly high gets taken, and then from there, distribution this way. Bitcoin, not much going on, has been dropping quite a bit. Come out again. This was our weekly order block. Now, we've got a bit of an inside candle for this week to start. Last week's candle pushed down a little bit, but I wouldn't be too scared. I know some people are now thinking, oh, you know, we're in the range bottom. That's it. This is it. We're going to crash to 70, 80K and everything's over. No. At some point, yes, that might happen, right? This is an accumulation. We are expecting a play of manipulation distribution. That manipulation, in my eyes, all the time being, can go either way. This is a higher time frame. It's a weekly time frame, right? First of all, this accumulation, for example, ran from March 2024, and we can argue it broke from about, you know, let's say about here to October to March, so that's 7 months, right? Currently, this accumulation began from November, and we're only in February, so it's been around 3. So I would not be shocked if this runs on for a while longer. Now, when that manipulation comes, right, of course, you know, it's going to be supported by some sort of fundamental news, but it's going to be very important where it goes, because when I look at this chart, this is a chart that's run very high. This is, you know, somewhat of a bull run, Bitcoin specifically. I wouldn't say the rest of the market's been treated as nicely, but essentially what I'm getting at is, this is the accumulation, and the next thing price does is run up very sharp here. It's likely this may be either the top of that alleged cycle, or a sort of intermittent top where, you know, it'll be AM and then we'll distribute very deep into this premium, probably spend a lot of time here and then back up. Or, you know, accumulation, the other scenario to consider, of course, there's only 2 scenarios if you are going to get the AMD, is a sharp manipulation this way into the discount. A lot of people are going to be scared, paper hand, leave their positions, capitulate, and then price absolutely sends it this way back to a new all-time high. S&P, very boring chart if I'm being honest, you know, not doing much at all for us. From last week, you know, we said we swept the previous weekly low. We want to see price trade higher. Instead, you know, we're printing a bit of a barcode on the daily chart. There's no clear bias here, right? Yeah, right now, I would say this is no man's land. It can go either way. We can run the previous weekly high and then come lower. We can, you know, look to push this low, previous weekly low, and then push higher. I would not have a firm bias. I would view the range as is at the moment, right? Low to high, still bullish, but the chart's just very untelling. It's not giving us much. I'll just be very patient. There's absolutely nothing you can do with a chart like this, especially on that daily time frame. But again, coming back to our monthly candle base of the previous candle, I want to favor the expansion high. So just wait on that displacement, wait till it gives you a clear kick above, and then find a way to align with it. All right, that is it for the midweek outlook, guys. I hope that helped. I know the bias isn't super clear, but you know, that doesn't necessarily mean you can't trade at all, but it does mean you shouldn't be trading as normal. Right? You should be very sensible, pick your setups, make sure they're good, and just go out there. Yeah, guys, any help, anything I can help with, just drop in the comments or drop in the Telegram chat, and I'll get back to you.